Hey guys, what's going on? How are we? Let me know if you can hear me okay. Hey Trevor, how you doing? Gentleman, how you doing? All right. Hola, Bubba. Okay, let's I haven't done one of these, it feels like, for a while. There was a lot going on in the past week or so. So I wanted to jump on really quickly, do a live, mainly because I have been watching a lot of stuff going on today. And yeah, there's a lot of interesting stuff going on with AMC. So I thought I'd talk a little bit about that, but also talk about some of the plans that are coming down the track for the channel, which I'm actually quite excited about. So I will take questions with this as well. So if you have questions, feel free to pop them in the chat. Let's already see what we've already got here. Carly, how are you? How are you? Hope you're well. Yeah, AMC is at $67. I played a bit of a trade on that today. I went at about 50. So I came out not too long ago, just before I started this live stream. So yeah, it's an interesting time with AMC. It feels as though we're having a bit of a repeat of what happened in January, and I think with this, obviously there are opportunities and everything like that, and I think people do get excited about these kind of things. And at the risk of me being like the party pooper and Uncle Pete almost, I do think it's important as well to try and might make sure that everybody is kind of aware of what they're doing and not getting too carried away with the hype of being able to make quite a bit of money in there. It is one of the situations where you do kind of need to know what you're doing. And more than anything else, with everything that's happening at the moment, fundamentals, this is not the time for fundamentals. If you're buying individual stocks, normally you're looking at what the business does, how they're making money, dividend payments, PE ratios, EPSs, all that kind of stuff you're looking at, right? In times like these, those kind of things go out the window. So it's more about, the day trading, technical analysis, that kind of stuff, to kind of understand what you're doing, to be able to recognize patterns. And I've certainly been watching a few people today where they're, talking about what's going on and so on and so forth. I'll do a video on it properly tomorrow. But I think it's really, very important just to kind of like take stock, just be a little bit mindful of, you don't want to get burned twice, because there are a lot of people. I've read some comments today. People said they put house deposits in, and it's like, okay, that's a ballsy move. It really, really is. And as long as it comes off, it's all good. But making sure that you're happy and willing to take that risk as well. I did have a comment on the video on my channel. I think it was yesterday. A follower. Let me see if I can actually find the comment, because I do want to say well done to this person, because they asked a question around capital gains tax. Apparently, they put in like £1,000 into AMC yesterday, and yesterday absolutely killed it. And I think they walked out with just over £2,000. I think they said it was like £2,102. And the question was, are they going to have to pay any capital gains tax? No, the answer to that would be no. As long as obviously you haven't breached your overall capital gains limit of 12,300, then you're completely fine. So that's a really nice, tidy profit to be able to walk away with without really having to pay any tax on it either. So really, really good on that front. So Trevor, how you doing? Let's have a look, loud and clear. Here, AMC, yeah, it's Carly. Right, there is one question here. Jedemel, are short squeeze something that are possible to actually find, or are they more friend of a friend? If you have, they're hard to find per se. I mean, you'll identify a short squeeze from just simple patterns within the markets and stuff like that. I mean, the first time it came around, because people within the Reddit groups kind of identified that actually, hang on a second, there's a short on a company, and they're shorting more. They shorted more shares than were available, and that's how the squeeze kind of began. Short squeezes to be this big and this mainstream, this kind of like public, is very, very rare. Maybe we're moving into a new area where you'll be able to identify these a little bit more. It's just a case of just maybe keeping your ear to the ground and paying attention to the markets to understand when these kind of things are developing. but it's not something you can you can foretell, or you can know for sure is coming down the track at any given time. It's almost impossible, really. And on the short squeeze and all of this kind of stuff as well, obviously one thing that happened in January was you had the likes of Robinhood and Trading 212 and the likes kind of suspend the ability for people to actually buy these shares. So if you are looking to get involved with this, you don't want to get caught with those kind of things, then it may be worthwhile seeking out alternative providers. I think the likes of eToro and Finico and places like that are probably the best bets for that. Food Dweller, when is Trading 212 opening new applications? I have no idea. They haven't had applications open now for a while. I'm guessing that they're not going to be opening any at all for the foreseeable future. That must be their business model. Bearing in mind, they did have quite a lot of growth through last year. So they probably got to their capacity right now where they feel, okay, we need to make sure that our systems are optimized to service the people that we currently have. And maybe they're not too concerned about bringing on new customers at this point in time. But yeah, they had phenomenal growth over the last 12 months. So I guess they're at that juncture in their business where they're trying to reevaluate what's going on, so on and so forth. What do you think about Tesla? Seems to have gone flat. Can you see them climbing to 700 to 800 in the next 3 to 4 years? In a 3 to 4 year term, yes. I mean, I think, what is Tesla at the moment? Where are they? Tesla at the minute is at 643. Let me just have a look at one of their charts, actually. To be honest, you know what? I've had so much going on over the last week or so, certainly over the last 2 weeks. I've not really paid a lot of attention to a lot of my holdings because my attention has been pulled elsewhere. So things like Tesla, I've not really paid any attention to at all. And that's not typically like me, because I do like to be on top of all of my my holdings and be active on that. But yeah, I mean, the chart for Tesla is not, it's not pretty. It really, really isn't. Actually, let me see if I can just share this screen, actually. 1 second, guys. Yeah, I mean, this is not pretty at all. I mean, they've had a little bit of a tough ride. I think they've had some recalls and stuff like that as well. They've had some backlash from some of the stuff in China and everything as well. But I mean, look at that. I mean, what was this right here? Yeah, I mean, I've only got a small position within eToro specifically, and that's down. Most of mine's in Hargreaves Lansdown right now. But since I went in here and I bought that at a low, I bought it when did I buy it? I think I bought it maybe around about maybe 600 or so at the time when I got into here. But yeah, I mean, this has been a really kind of like downward spiral. So in the next 3 to 4 years, do I think that they'll get up to the 700 to 800 mark? I think they will. I think that's enough time for them to be able to have a little bit of a rally and actually set the business up. It's going to be heavily dependent on, obviously, delivery numbers. That's going to be really, really important to them. The financials as well. That's going to be really, really, really important to them. But I think in 3 to 4 years' time, they've got enough time for them to make the necessary amendments and put things in place to see them move closer towards that 700 to 800. I would, because I'm bullish on Tesla, I would say that they'll probably be over that. I would expect to see them maybe at a 900,000 mark. Personally, that's my own projection. Obviously, I don't have a crystal ball, but I think in 3 to 4 years' time as well, we'll be further down the line with the whole transition to EV. Now, obviously, they do have competition with the likes of Mercedes, because the EQS is incredible. It just looks really, really, really nice. So I think they're going to have a lot of competition, but they do have strategic advantage. So that strategic advantage is going to be very, very, very important indeed to their success moving forward. How tapering will affect stock market? What do you mean? I'm not sure what you mean by that. How will tapering affect? Give me a little bit more, Kiki. Even Revolut for stocks, AMC on there, also free trade, yes. So if you are worried about possibly not being able to buy any of these shares because they might suspend the ability to buy, then definitely go and seek an alternative. I've been doing a lot of stuff within eToro over the last maybe day or two. Certainly today, I opened the trade up in eToro. You need to watch the spreads with eToro, though, to be fair. But yeah, it's relatively easy. It's very, very quick to get in, get out. And if you were so inclined, you can also CFD the options as well, so you can actually short the stock as well. So if you're that way inclined, I need to do a video on that actually on eToro, specifically how do you actually go about shorting using CFDs, so on and so forth. But yeah, eToro is one that I've been using roughly today. What's the best option to trade in 212? There's quite a few, food dweller. I mean, you've got, so alternatives will be free trade. That's maybe the closest, because if you think about what trading 212 do, they do US stocks, UK stocks, right? So you get both markets. Free trade will allow you the opportunity to do both. You've got Stake, but Stake is a US market specialist, so you won't have access to the UK markets. If you're not worried about the UK market, Stake will be good. You got eToro. You can also get cryptos in there as well. Who else do you have? You've got Orca, but Orca's only UK markets. You won't get access to the US. So the best two that I could probably, or three that I could give you, will be free trade, UK, US, eToro, UK, US, and cryptos, and then Stake, which is US market exclusively. Puts and calls. Is it possible on trading 212? Yes, you can if you do it under the CFD arm of the app. I'm pretty sure that you can do put and call options on trading 212, but you need to use the CFD section of the app, not the invest. I bought into Earth 2. What do you think? You know what? This is really interesting. Right. So this has come across this has been mentioned to me a couple of times on Instagram as well. I've not had a look into it. See, from what I gather, and I don't know whether this is completely wrong, but for some reason I'm thinking of it as almost like an NFT. I don't know whether I'm right. I need to have a look into it, Fiona. But I've heard that there's quite a lot of hype. Many people have actually asked me about it. I need to have a look into it properly. So I'll have a look into it and maybe do a video on it, maybe, if that's going to be of use. Do you incorporate technical analysis into your own strategy? I don't day trade, so no, because I buy long-term stocks for long-term holds. I mainly rely on fundamentals because that's what I'm really looking at. I think technical is really for if you are day trading. You kind of need to know what the RSIs are and volumes and moving averages and VWAPs and all that kind of stuff, and that's really what technical analysis basically does. So I don't trade on a day-to-day basis that often. I don't have the temperament for it more than anything else, and because I've got so many other things to do during the day, setting something and then having to pay attention to it and watch it, I just get distracted. So for me, it doesn't really fit into my own kind of like things that I do and my own approach. So I'm more of a buy and hold kind of like investor and not particularly a day trader, if you will. Let's have a look at this one. Is it worthwhile to have accounts in multiple platforms in case one platform suspends trading for a stock? Yes, absolutely. I mean, I've got trading 212, free trade, eToro, Stake. Who else have I got? I've got Orca as well. So I've got 5, but I use 4. I use Stake, I use eToro, I don't really use free trade, to be fair. I should use them more. And I use trading 212. So there's 3 that I use, but I've got 5 altogether. So there's nothing wrong with that at all. Orca is bringing in US stocks this summer. Okay, that's good. Because yeah, that's one thing that they were missing, because like the UK market is great and everything. And I had a conversation with someone yesterday on a podcast talking about the fact that, you know, if you look at the US market at the moment, economy's taking a little bit of a dive because of inflation risk. So if you think about where we are in the economic cycle, some of the stocks here in the UK are now looking very attractive. Hospitality, travel, some of those stocks are looking really, really attractive as well. And it kind of harps back to what we talk about in terms of when you're looking to invest in the stock market, diversification is really important. So having your exposure across different territories, so the US, the UK, Europe, those are fundamental things that are really, really important. You should never get too focused on one thing. You need to have a well-rounded approach. And now it's a prime example of when those kind of things are extremely important to bear in mind, because you always want to counterbalance in your approach. If the US isn't doing too great, well, in prime example like us now, we are hopefully about to exit lockdown fully this month in what, 19 days or 18 days. Well, hopefully that means that we'll see some of our companies domestically perform really well. So it's really good to have a diverse approach from a geographical point of view as well. Okay, thanks for the clarification on this. Fed tapering and its impact on markets and US stock market. It will impact it for sure, definitely. To what extent, though, we don't know. It will just mean that markets may be a little bit volatile for the time being. But again, if you're investing, then this comes with the territory, right? I mean, the Fed's job is to kind of ensure that the markets are operating in an efficient way. You can't expect them to continually pump money into the economy, also whilst there's inflation risk going on. There has to be measures, levers that they're going to pull to try and bring everything into a semblance of kind of control. So if they do start tapering out, yes, it is going to impact the markets. It may mean that it's a little bit volatile, but we should be prepared for that anyway, because we can't expect that the markets are going to go up perpetually. It is going to have some sideways movement. Got into Fineco on the back of one of your videos. All good at the moment with the free trades, decent platform. Yeah, Fineco is really, really good. I enjoy using them. The Power Desk is really cool. Just the ability to have access to loads of different bits of information. So, like today, for example, I set the a trade with AMC, but if I would use the Fineco Power Desk. And in eToro, it's a little bit quicker. With Fineco, you've got to set it up. But with Fineco, you will have access to all of the live news streams in one platform. Whereas with eToro, I've got to have a browser open. I've got to have 2 or 3 different browsers open seeking the information. You can't filter that information down to the company that you're looking at. In PowerDesk, you can do all of that. So if I want a proper setup, that's what I would do. I would use the Power Desk because I can filter down the news and all that kind of stuff. And I can easily, very easily, a couple of clicks, just literally set myself the trade, get in, get out as and when I want to. And it's just really good. So yeah, it's good that you're finding a good experience with Fineco as well, especially with the free trades, because the free trades are also really good. Thanks for that super chat, Bobo. I really do appreciate it. Thank you very much. Kiki, so which of them have lower fees or charges? It depends on. So I'm guessing you're talking about Stake, Free Trade are the ones we mentioned, Orca, eToro, and we mentioned Trading 212. That I don't know. I mean, a lot of them are zero commission, but they will have spreads. So I can't tell you off the top of my head what the spreads are or what the charges are. You'll need to do that little bit of research on your own, unfortunately. I couldn't tell you because I don't know all of the charges and the spreads off the top of my head. I use IG. They've been really good for me. And you can remove charges as long as you make a few moves per quarter. Yeah, because I think with them, they charge you for inactivity. So if you're not active over a period of time, they do charge you. But as long as you stay active, there isn't any charge at all. So yeah, I mean, IG, I need to have a little bit of a review of them. But with that being said, I'm going to talk about some of the future plans in the moment. I kind of want to move away from some of the reviews, but I do know that I need to keep them kind of like core to the channel. So we'll talk about plans in a minute. Let's just get through a couple more questions, because I am very excited about the work that we've done over the last maybe like week and a half. Really excited because there's some really good stuff coming down the line. I'm very excited for it, and I hope that it's going to be received well, and I hope that you guys find it useful. It will be different, but a good type of different. And yeah, so, and by the way, guys, there's 53 of you on here at the minute. There are 9 likes. Help me with the likes, please. Let's try and get that up to maybe 25, 30 if you can. Let's have a look. There's a conversation going on. Let's have a look at this one from Irene. What do you think about shares, iShares electric vehicle and driving tech ETF for long-term investment? Yeah, it looks like it will be a good one. I haven't looked at it specifically, but off the top of my head, what kind of companies will they have in there? They'll probably have the likes of Tesla, NIO, Xpeng, people like that. They might have maybe Churchill Capital in there. So I think anything that is the world is definitely going towards electric vehicles. So an ETF like that, especially if it's iShares, which is BlackRock, and I used to do a little bit of work with BlackRock when I was in Canary Wharf, they are very thorough in terms of their research. So you can rest assured that they will be really, really thorough in terms of the companies that they research to put within that ETF. So I think that will be, they would have put that together for a reason, and they will have specific goals, objectives that they want to meet with that fund. So yeah, could be a really, really good bet. Just make sure that it is right for you, and obviously that your level of risk appetite matches that of the fund. I think that's the most important thing to kind of bear in mind and try and remember if you can. All right. Okay. No, I am not a dating coach. That's definitely not my forte. Yeah, that's definitely not my forte. But if you think I am, I guess thank you. Yeah. Oh dear God, is everything a short squeeze now? I'm just going by the title. Wall Street Bets and the so-called YouTube investing fraternity are really getting on my fucking tits. Well, look, mate, if you don't like that kind of content, then don't pay attention to it. You choose to click on videos and watch them. If you don't want to watch them, don't if you don't like the content, just don't watch them. It's really that simple. But, you know, for those of us who do talk about the investment stock markets and stuff, this is normal stuff that is happening in the markets. And unfortunately, people do, fortunately, people do take an interest in it. So when we talk about these kind of things, it's because we also have an interest in it and we want to help people. Especially with my background, I'm kind of like the guy who's maybe the party pooper, and I feel guilty sometimes because I'm being like, well, listen, guys, don't get too hyped up and too excited. Make sure you understand what you're doing. And I think that my voice in this kind of setting is actually quite important, because there are so many YouTubers, which I guess is the bit that gets on your nerves, constantly hyping things up all of the time. If you watch any part of my channel, you'll kind of understand that I'm the very, very opposite to that. But at the same time, if you don't like this kind of content, don't pay attention to it online, really. You're just going to stress yourself out, mate. Yeah, so I'm just having a look at this one here from Money, Whiskey and Coffee. Started with Fineco and Gero. Both of them are really good. Both of them take extra steps so that you know what you're doing, online tests and stuff. Yeah, and that's one thing that I will say with both of them are very, very good. Like, you know, some companies could do more, and I won't mention who they are, but you probably know who they are. It's very, very easy to sign up and just get going. But sometimes you do have to be aware of, you know, like, what are you getting into? And they have a duty of care to make sure that you know what you're doing. And one of the things that both of them do really well is they take you through tests. And with Fineco specifically, based on how you answer the questions, they actually tell you that you may not have access to the full suite of functions within the either Power Desk or the website, because certain things will be grayed out to you based on your experience. That's just due diligence. That's them trying to keep you safe, and selfishly trying to keep themselves safe as well from potentially being sued or being raked over the coals by the regulator. That's just how things work. And I think that's a good thing. And we need more of that, really, to be honest. Here's a question here. You have invested in cannabis market, if I remember, Village Farms. So what is the future of cannabis now? Well, at the minute, I'm still holding those stocks. I think at the moment it's still on the agenda. I haven't seen any news that will suggest otherwise. I mean, if I look at my Village Farm position, I bought Village Farm, I bought Tilray, and I also bought who did I buy? Let me just have a look. I bought Canopy Growth, Tilray, and Village Farms. So Canopy Growth at the minute is, for me, down about 27%. Tilray, I think, is doing okay. Tilray's up at the moment 8.89%. Then I'm down on my Village Farms 27%. So it's one of those situations where, if you watch the video when I talked about my reasons for buying them, I bought them, and I have bought, you know, they're in my portfolio at the moment because I plan to hold them for 4 years, at least for the first term of the Biden Kamala Harris administration. Because if they do manage to pass something legislative wise, I think those companies will be best positioned to take advantage. we'll see what happens. We're still very early in that 4-year cycle. So, and challenges are to be expected. Things aren't always going to go as they please. So at the moment, I'm going to hold, and then I'll reevaluate coming towards the end of the next 4 years, to see where I am. And if I have to, cut at a loss, I'll reevaluate it at the time. So have a look at this. Since you mentioned the American inflationary risk, I'll say a lot of panic about it. What are your thoughts? Appreciate the content, Pete. Keep up the good work. Thanks, Ruben. Look, I think ultimately one of the reasons why there was such a big panic is that, economies globally try to keep inflation. Well, certainly here in the UK and in the US, we try to keep inflation down to like 2%, right? So when the numbers in the States come out at like 4.2, it's double than expected. It's like, whoa. Okay, so that means that the price of things are actually increasing in value. Now, particularly in the States, you got to remember, there's been a lot of people who are unemployed. They've had limited help from the government in terms of stimulus checks. And any extra cash that they did have, you can argue, was plowed into the stock market, because the stock market was the only place really to get a decent return, if that makes any sense. It's almost like a perfect storm, right? You get the economy shut down, you have high unemployment. So the guys who do have a little cash are looking for where they can put their money to get interest or to grow their money. You don't get much interest in interest rates in the banks anymore because the interest rates are so low. So the only place you can go, you can't go to treasury bonds or anything like that. The only place you can go is the stock market. So you plow a ton of money into stock market to try and get that growth. And because you're not the only person thinking the same way, you have millions of people plow money into the stock market. That drives up the stock market itself. And then you have inflationary fears, where it's like, well, hang on a second, nothing else has really changed from where we are as a country at that point. Double the inflation rate, and people start to think, hang on a second, I might need cash because things are going to go up around me. A lot of them would have made some money, luckily, in the stock market over the last 12 months. So therefore, what happens is people start to pull money out the stock market because they're thinking, well, I might need it because the cost of things are going up around me. It's a really weird, like, vicious cycle to be stuck in. But, it is one of those things that they are paying a lot of attention to. I think the Fed will have to start moving. They've done a bit of a 360, to be honest. 1 minute they were saying they're quite happy to let inflation happen at a slow pace. That freaked the markets out. Then I think maybe 3 weeks ago or something like that, they were saying, well, actually, they may intervene. So it will be interesting to see what actually happens and what moves they make, because one of the levers that they do have is to increase interest rates. So whether they do or not, and how soon they do it, and at what rate increments they increase the interest rates at, will also be very, very interesting to see. I don't think that they'll increase the interest rates dramatically. So like a 1%, oftentimes they don't do that. It will be a 0.25% here or there. And they may actually give out some news so that people can prepare, so the markets can price in increases and say, over the next 4 quarters, we anticipate interest rates increasing by 1% or 1.5%. And what that means is it's signposted for everybody, where you can actually prepare for potential increases in interest rates. And what that might mean is the counterbalance to that is, whilst it's negative in one angle, is actually can be a positive. So if you're looking to buy cars or houses, you think, actually, you know what, I want to take advantage of lower rates. If you've been holding off on that, you might decide to take that step a lot earlier. So it can be used to stimulate the economy as well. But it also means that for savers who haven't had any decent interest rates for so many years, you should be able to get I say good rate, a better rate than what you're currently getting right now, even though it's likely still to be quite a small rate of return on deposit accounts. So it'll be interesting to see what happens moving forward with it. What you advise is work well with me. My problem is the money is shorter. So I'm trying to make sense of what you mean by that, mate. Uh, mm, okay, I don't know. Can you elaborate on that for me? I don't want to assume what the answer might be. So can you just elaborate on that for me, Paulo? If you know which company a SPAC is going to buy, you have researched the company. Are you happy with it? Worth buying the SPAC stocks? Potentially, yes. Potentially, yes. I well, what typically happens when a company is acquired by a SPAC, right? A SPAC's entire purpose is to take the company public, right? So I guess it becomes a gambling game to a certain extent of what is the market reaction going to be to said company. Now, I don't. It doesn't always happen like this, but what we've certainly seen, or maybe over the last 12 months at least, or 18 months, is IPOs typically in the States have a really good day, right? So as long as you have, I don't know, good names, I guess, involved in the SPAC and the prospectus looks good, as long as the initial offering has a good reception, I think you can be okay. But I think, you're not just buying it because of the IPO day and the fact that it might go up. You're hopefully buying it because, it's got long-term profitability possibilities. So if you've got the research and you know it, yeah, then absolutely. But yeah, make sure it fits within your investment approach and your diversified formula as well. Make me up, Fab. What's a good investment book you would recommend for a beginner, please? There is a ton of books on my in my description, in my description section underneath the videos. I've compiled a list of books for first-time investors that you can actually read. Go and check out a couple there. There's some really, really good ones. I always say that there's one, it might be a little advanced, but How I Invest My Money is a really, really good book because it was written by investment professionals. And I think the reason why I like that book is because it's one of the first that has been written by people who are in the industry. And it very, very quickly opens up your eyes to how people within my industry actually invest their own money personally. And not just that, their approach to their general finance through a number of them as well is very, very interesting. But it is in the link that I provide in the description. So go check that out. It's called How I Invest My Money. It's a very, very good read, and it's quite light as well. You can get through it in like an afternoon. Cheers for this, Ruben. I appreciate that, mate. I try to make sure I'm sometimes I'm worried that I give like really long, detailed answers, and I worry whether people kind of like switch off or not. But I think like context is really, really important. And I think the more context you can give, hopefully it helps you kind of like broaden your own understanding or something, or at least gives you a basis to start from to understand how things work. Everyone was saying that the market is overpriced, but it's still going up. Is that a bubble? Are we in the bubble? Look, the market has been a big bubble now for God knows how many years. The market is overpriced. I mean, a lot of the market is overpriced. The recent correction in the US market will kind of, many people will argue that, okay, maybe things are approaching more of an acceptable level. But I think there is definitely a bubble at this point in time. We are overdue a proper correction by a good number of years at this rate. But, if you're investing, should that prevent you from investing? No, you just have to invest with the knowledge that, the markets might go down. The markets might correct at, 20% tomorrow. We've got no control over those things. I was asked a question yesterday about what are the best stocks to invest in a particular sector. And I was like, look, for me to answer you that question, like buy me a DeLorean, right? And I'll jump in that DeLorean, go to like 2050, come back and give you all the plays. But, that's virtually impossible. We don't know when the next market crash is going to be. We don't know if the bubble is going to pop. There are certainly very strange times now when it comes to the stock market. Some fundamentals don't add up anymore. We've got a whole kind of like change coming with the power of the retail investors, right? That is a real thing. It really, really is. And the markets have never been in this position before where there are so many influencing factors upon it. Before it used to be the banks and the big boys, right? The banks and the big boys are still there, but you've got retail investors now, and that's freedom. That's the ability to trade. That's the ability to move share prices and stock prices because you have a movement. What's going on right now, right? We're moving into a new era. So it's really important to understand, like, things are going to change. Things are always going to be uncertain. But when you're investing, bubble or not, just be prepared for the ups and for the downs, and hopefully try to factor in as much of that risk mitigation as you possibly can. And that means doing your research, is being diversified and not overextending yourself on the risk, being greedy and not having a strategy. I think if you keep to those things, you'll generally be okay. All right, we're running now, fam. Fammy now. Yeah. Let's have a look. Do you think HL will ever lower their trading fees? Great question. I wish that they would, because to be honest, though, see, this is what I have a problem with some of the old boys, right? But this is where challengers and new people coming into the market is so good, because, you know, if you think about some of the more established providers out there, they've had it their own way for years. Like, this is my fee. There was nobody competing with them, so they've always been able to charge that. Now I think £12.95 or £11.95 for a trade is just ridiculous. And I think now that there's Trading 212, eToro, Free Trade, Orca, Stake, they're offering the ability to get into the markets are like zero commission. Yeah, you got to pay spreads and a few FX fees here and there. They're gonna have to seriously sit down and think, hang on a second, are we doing something wrong? Arrogantly, though, they will argue at Hargreaves Lansdown that they're not really looking for new money. They're looking for old money. They're looking for people who have money. And in their book, the people who have money are the guys who are in their 50s and 60s. Unfortunately for them, even the older generation are now looking at the likes of eToro, Trading 212 as a way of accessing. And my fear is that they're not going to sit up, pay attention, and do anything until finally they lose part of their client base. But that's not necessarily a bad thing. Maybe that will make them sit up and pay attention. And I think they do need to be honest. So really good question. 10.6 inflation data. I think stock will go down a lot. Also 13.7. Which data is that, Kiki? Let me know. You've been saying market crash for a year now. That looks like it was the best opportunity in 100 years, but you keep saying end of the world is near. Why did you get fired from the previous job? I didn't get fired from my previous job. It was COVID, mate, as like many people. And I've not been saying that the markets are going to crash. I said the markets can crash at any minute because we are overdue a market crash at this point in time. We've had a bull run since what? 2007, 2008, since that last recession, really. And typically, if you look back over the history of the markets are cyclical. Typically, you will see a correction every 10 years or around about on the 10-year mark. We're way overdue that right now. So that's always going to be a possibility that investors need to be mindful of and need to be aware of, because unfortunately, a lot of the time when you look at investment content here online, it is all about the hype of what you can make, and not talking about the downside risk. And unfortunately, there is a really, really big chance of losing money on the stock market as well. And it's really important to be prepared for that downside risk. And there are things that you can do to prepare for that as well. Cheers, Tommy. Appreciate this. Thank you very, very much. He doesn't listen. That may be part of a conversation that's going on already in here. Right, let's have a look and see if there's any more questions. Thanks for this, Lee. I do appreciate it. And look, I hope, I think with the channel now, we've got so many videos up online. And sometimes it's really, really hard for me to keep up with all of the comments that come in across all of the various videos that we have on the channel, which is why I tend to do these, where you can ask me questions and we can interact one-on-one, or at least virtually one-on-one, right? And I can answer some of these questions. And I hope that, guys do find the information on the channel useful. Like the channel, my channel is very, very different to others. It really, really is. I'm not talking about what stocks you should be buying. I'm trying to give a bit of a level playing field and just kind of like a sense check to some of the hype that is out there. Purely because that's my experience. And I have seen people make a lot of money. I've also seen people lose a lot of money. And unfortunately, where people make money, somebody has to lose money at the same time. That's just the way the world works. And I think if you're losing money in the stock market, I think if you're prepared for it, you can deal with it a lot easier than if you didn't know that it was even a possibility. And many people, unfortunately, over this last year have gone into the stock market not aware that, oh, I could lose money. Because if they did know that they could lose money, their approach would have been very, very different. There's no point in getting people to do something and get people excited about something under a false sense of security. You need to give people the full picture. And that's what I do across the channel. That's what I aim to do across the channel. And that's the whole purpose of the channel, is to give you the things that you may not necessarily want to hear about, that aren't going to be popular opinions. It is literally just telling you the truth. And that is the same with, some of the other videos that I've got on the channel, which are very controversial. It's giving you my view based on my experience on some of the downsides and the things that you should know. It's not there to ruin anybody's party or to, make you feel as though you've done something horribly wrong. No, it's just to help you be prepared as much as possible for both sides of the coin. Social media is such that the shiny side of the coin is what is being pushed, because that's sexy. That's what gets clicks. That's what gets followers. The opposite side to that coin, which is dark, can be ugly, it can be unpalatable. That isn't spoken about enough. And for me, I'm not the kind of guy that will just talk about all the good stuff and none of the bad stuff. It's one of the reasons why I don't do portfolio reviews, because first and foremost, if I make money or lose money, okay, you can see both sides of the coins in that, but I certainly don't talk about, cars and watches and all this kind of nonsense, because it's completely and utterly irrelevant. It's completely and utterly irrelevant. If you can take a little bit from what I've learned working in my industry and implement it into your own personal life, that's where the real value is. The value isn't in me telling you, oh my God, I bought a Rolex last week, by the way, guys. This is how you can also buy a Rolex. You might not want a Rolex. That Rolex might be completely inconsequential to you. It doesn't add any value. But if I tell you some of the practical things, important things to bear in mind, that if you're investing to keep you safe, stop you from losing money, I think that's where the real value lies in what I do. Maybe I'm wrong. Maybe I'm a little bit of an optimist in that regard. I don't know, but that's just my outlook, and I'm always going to stay true to what I think, essentially. So, Mohammed, great channel and content. I've had some luck trading on Trading 212 on mostly short trades on indices. Do more on stock now, but still struggling. Look, mate, it can be difficult. And like, if you just started out as well, you got to remember that you're going to have a learning curve. And that learning curve, some people will be like a year. Some people, it might be 6 months. Some people, it might be 9 months, 3 months. As long as you're making progress and you're getting a better understanding each time, that's the most important thing, mate. Especially if you are trading as well. It's really important, if you are trading, maybe journal your stuff. Like, what was the trade? What were the reason why you took the trade? What were the things that you looked at? Was it a successful trade? Was it a positive? Was it an unsuccessful trade? If it was unsuccessful, why was it unsuccessful? If it was successful, why was it successful? Were there any things that you missed? Any things that maybe you should have considered that you didn't know that you needed to consider? I think if you journal those kind of things, as you develop and as you get better and better and better, you can always go back over those notes to kind of like pick up and be like, oh, right, next time you might be in a similar situation where you want to trade a particular stock or indices, right? And it's like, oh, I had that scenario last time. You can go back and check your notes. And I think as long as you're making progress, that's the most important thing. There's a follow-up to that. You're struggling to find where I actually use leverage on the app. Okay, is it quantity on the order details or somewhere else? I may sound silly, but hey, and would appreciate your help in clarifying. Okay, so on your side then, on Trading 212, you need the CFD side. I don't use the CFD side, but you should. I can show you what it looks like in eToro, and it should be fairly similar. But you will have on the CFD side, when you go and open the trade, you should have a section in there that will give you, it might have a number next to it. It'll be like ×2, ×5, ×10, something like that, but you will have a function there specifically. If all else fails, mate, it might just be worthwhile reaching out to the team at Trading 212. They do respond, or get onto their community tab, because they do have a lot of help and guide sections on there as well. So yeah, definitely go down that route. I don't use the CFD side because I don't use CFDs and don't use leverage myself. Because for me, again, I don't day trade, so I've got a lot of stuff going on during the day. But asking the community group there, and hopefully that helps, mate. Right, Kiki, I've got you there. 10th of June is the inflation data. That's why I think stocks will go down. Stock market will go down, the US stock market. Yeah, the 10th of June. So that's next week, isn't it? That's next Thursday. It'll be interesting to see what happens. I would like to think that they would be able to keep the inflation. I think as long as the inflation number is lower than what it was last time, there will be a positive kind of like reception of those figures. If it's more than the 4.2 from the last time, then I think there might be a little bit of an issue in terms of, right, things are running out of control now. So it'll be interesting to see what happens on the day. What do I think of AJ Bell? AJ Bell are okay. For me, they're kind of like one of the old boys almost. They can be quite expensive as well, if I'm honest. But they are a good, long-established company, essentially. But I think a little expensive for what they actually offer. They do have some really good systems though, but I think ultimately it's all about what kind of functionalities you want and how you like your provider in terms of their interfaces, so on and so forth. I say this all the time, like your provider selection should never be determined simply by how much they charge. Like going on a cost basis only, you're going to miss out so many other factors, mate. Like if you're the kind of person that, for example, you would like to know what's going on if markets are tanking, right? Then you want to get a provider that has a really good system to update customers on what they're doing or information about the market, so on and so forth. Hargreaves Lansdown is very, very good at that. The reports that they send you on a monthly basis, top-notch stuff. The research papers they send you, top-notch stuff. So if you're the kind of person who likes information and likes to digest the information, those kind of providers are better. But for those guys, you've got to pay an extra fee because of that service. So it really depends on, what kind of service you want. If you're the kind of person that doesn't really care about information and you're just quite happy to just set it and just let it just be done and, let it do what it does in the background, then, cheaper providers may be good because they don't necessarily provide that level of additional information or additional service on your way. So it's really swings and roundabouts, mate, but they are a really, really good provider, but it really depends on whether it's going to fit within your approach and whether you think that you can work with them as well. All right, this is a mortgage question. I like this one. Okay, cool. So Samuel, my partner and I have been considering purchasing a house versus purchasing a flat to let. It will be our first property and we currently rent. What would you suggest? I think ultimately you got to do what you feel is going to be best for you, mate. I know that there are many people now that, so for example, I know someone who, she doesn't have her own property at the moment, but she decided she wants to buy a flat property to rent to start off with, and that's going to be her first home. Well, the first home, the first property that she owns. And she's arrived at that by having a look at her circumstances, looking at where she wants to be in 3 to 4 years' time. And she goes, actually, you know what? This is the best decision for me. This is what I feel comfortable with. I think you have to feel comfortable with it. What I will say though is, if you go and buy a buy to let, then just be aware that you are going to jeopardize any help that you can get as a first time buyer, because technically if you have a flat or buy to let, you're not going to be a first time buyer essentially. So you potentially lose, things like the ability to use things like your lifetime ISAs to get help to buy schemes, all those kind of things. So that is a really big consideration to take into account. But you have to do what you feel is right for you. And don't feel as though, by the way, because again, this is a societal thing, right? Society says you should do this, or everybody else is doing this. You need to do what you feel is right for the both of you. So sit down, have a conversation, see how you both feel, and make a decision and feel comfortable in the fact that that is right for you, not right because everybody expects you to do one thing. Like, it's your life, it's your money, it's your investment. You have to make sure that it ticks the boxes and all of the boxes that you require, and not the opposite way around. Cheers, Josh. Love your outlook on the stock market. I was wondering if you had any opinions on UK property prices. Have skyrocketed like the stock market. Yeah, I mean, the UK property is really, really weird. I mean, where I live in Shropshire, and a couple of my neighbours have recently moved, and they've moved to properties that, you know, Jesus Christ, the prices are ridiculous. It's like, given everything that's happened, and obviously the stamp duty break has kind of contributed to that. Will it slow down after the stamp duty break? But I think fundamentally, when it comes to property, it is a simple supply versus demand issue, right? If you have a limited number of houses and you've got a high demand for it, the value is always going to be kept. And I think we do have that unique equation here in the UK. We've got less houses than are required, and therefore, with that many people looking to get on the property ladder, you will find that property will probably still keep its value pretty healthily, regardless of what's happening from an economic point of view. It might slow down, but will it crash? Probably not, because the demand is still going to be there regardless. There's a follow-up question here from Sam. It's also, if you were to divide your post-living expense portfolio, where would you invest? Stocks, bonds, ETFs, or house? If you were to divide your post-living expense, portfolio. Okay, so you're talking about your surplus income. Where would I invest? Stocks, bonds, ETFs, house? So for me, what I do is I have a lot of stocks, basically, and I've got a load of index funds which have a mixture of stocks, bonds, and property within them, essentially. So I do maybe a little bit of a mixture of all of those four things. Personally, I think if you're looking to find out where you should invest your own surplus income, I think there is a good place to start would be to have a look at maybe the likes of Vanguard and stuff like that, where you're going to get proper diversification. You can obviously go and buy, individual stocks and Trading 212 and eToro and all those the apps that we've already spoken about already. You can absolutely do that, but I think diversification is really, really important, especially given the fact that markets are a little bit volatile right now, and the world is still in an uncertain place because of COVID. We're coming out the back end of it now, but in hindsight, given the fact that we started really, really badly, I think we're going to finish really strongly in the COVID journey. So diversification, I think, is really important. There's a follow-up here from Sam as well. How would I divide my portfolio by percentages? Okay, so this is a good question, mate. So typically, your portfolio should be divided by and dictated by the level of risk that you're willing to take. So without knowing your risk appetite, it's very, very hard to determine. But for example, if you are an adventurous client, then you may decide that you want 80% in stocks, then the rest, maybe 10% in bonds, 5% in property, or something like that. It's really, really hard to kind of say you should do X, or this is how you would divide up your portfolio without knowing what your risk appetite is. And depending on where you are on the scale as well, that will vary. I think if you haven't taken a risk profile test before, and this is something that I do with people on one-on-one coaching, if you haven't taken a test before, sit down and try and ask yourself, okay, in a perfect world, if everything was to crash tomorrow, would you feel comfortable with having over 60, 70, 40%, or 50% in equities where you would suffer the most losses? If the answer to that is yes, then absolutely go for the higher proportions. If the answer to that is no, then you need to be looking at the lower proportion in stocks, then incorporating things like your bonds and things like that will diversify your portfolio and maybe be safer havens as a way for you to arrive at a split that might work for you. There isn't an exact mathematical equation to it, but without knowing your actual risk profile, is really, really hard to gauge. On my course, I actually give examples of what a a portfolio makeup might look like typically for a cautious, a balanced, and an adventurous client. Well, typically what I've seen working in the industry as a financial advisor and in investment houses, when we're building portfolios, typically balance will look a certain way, cautious will look a certain way, and adventurous will look a certain way. You can shift and move because you have, I'm going to get a bit technical now, you have strategic asset allocation and tactical asset allocation. So tactical is the ability for it to swing either in positive or negative of your set parameters. But I talk a little bit about that in the course and stuff like that as well. But it's hard to know without knowing your personal risk profile. Put 1,500 into AMC last night, just made £700. Congratulations. Do you think I should pull out my profits or will it go higher? Mate, good question. I don't know whether it will go higher. It could possibly go higher. They're saying, so I found out yesterday that apparently there are a lot of options. I wrote this down actually. Bear me 1 second. I'll see if I can actually just find it. And there are a huge number of options out on AMC stock right now. It was 75,860, I'm pretty sure. Where are my notes? Where did I put it? Yeah, so there are 75,863 call options on AMC stock for June the 18th, and they are reliant on the share price being at $73 a share. So where is it just closed today? I think today, let's have a look quickly. So it's at $58.85 at the moment. So I got out, I think I got out maybe around about $61 today because I ran a quick day trade on that. So on June 18th, there are 75,000 call options. Now, when you look at a call option, they're in bundles of 100 shares, right? So that means that there are 7.5 million shares that will be available for sale on June the 18th at $73. So in other words, can the share price go higher? The call options that have been put out are betting that it will go higher. So in other words, let's put it this way, and this is why I need to sense check myself, because you have call options and you have put options. So put options, let me just go back and make sure I get this absolutely right. Because one of them is an option for you to buy, one is to actually sell. Now, what you're trying to do with this is you're saying, right, okay, so you have an option here at $73. If the share price is $100 on June the 18th, the people have an ability to buy it at $73, which means that actually you're getting AMC shares for a discount. What you can then do is you can buy this option at $73, then go sell it at market value. Okay. So if the markets were to act in the way that we're expecting them to, and the AMC share price goes to 100, you can guarantee right now that all of those call options will be exercised. And that in itself should mean that you're going to see a big push in the share price. Will that happen? I don't know. I think if you've put money in, you've made 700 quid today, mate, congratulations, because that is a really, really good play that you've had there today. I think do you have a strategy? I guess is going to be my first question for you. Are you happy with 700 quid, or are you planning to go back in tomorrow and see if you can get another 200, 300 quid specifically? The biggest challenge that most of people face when they look at these kind of situations is knowing when to get out. That's the biggest thing. Why? Because naturally as human beings, we are greedy. Like we'll sit there and think, okay, so like I've got £200 profit right now. It might got 250 or so. I'm going to wait and see. Then it reverses. And then you get, oh my God, it's down £100. Then you start chasing your loss and you're like, oh my God, I wish that I got out at 200. But then you find yourself back at that position where it's 200 thinking, nah, it might go to 250. Psychology is really, really important. So do you actually have a strategy? Are you happy with 700 quid, or do you want to go back in tomorrow and see, right, can I eke out another £200-300? Because that's really where the discipline essentially comes in. Whether you think the stock price is going to go higher really does need to dictate what you're doing. So hopefully you're watching people, you're reading things, and you're taking an indication of the momentum. Because look, let's face it, this right here, fundamentals don't matter. This is all about momentum, right? If the trajectory is an upward trajectory, then you get on the train, right? You get on the ride, you try and participate. If it's downward trajectory, then hopefully you're like, okay, I'm going to sit this one out a little bit, because you're all looking to make money here, and I'm assuming you're not using leverage, or you're not CFDing and shorting the stock either. So you kind of need to make sure you've got your own strategy. I don't know whether the share price will go up to the hundreds or the $73. Possibly, but I would definitely just stay tuned to it and please make sure that you don't get greedy. If you get to like your limit and it's like you're happy with 700 quid, take it out. If you want to keep going, but just know that at any given point it could flip on its head, and you just don't want to be kicking yourself saying, I was 700 quid up, but now I've lost 600 quid because now I'm only 100 quid up. You still made money, but you haven't made 700 quid, if that makes any sense. So psychology and just having a strategy is really important here. Why is Tesla dropping so much today? Plus, what do you think is the realist value for Tesla stock? I don't know why it's dropping today, mate. To be honest, I've not really paid that much attention to Tesla over the last, I would say, probably month or so, really, to be honest. I think it's one of the situations where oftentimes with Tesla stock, you'll see that it will trade sideways for a period of time, and then you'll see a little bit of a rally because something has happened, or a piece of news, or, a cycle in that stock tends to happen. I don't know why it's dropped today. I know that they've had some really negative press around some things going out in China and stuff. And they are being affected by the whole global chip shortage as well. I know that's a big issue for them. And I think Elon actually spoke about that maybe last week or so. So yeah, I mean, those are things. I think, fair value, realist value for Tesla stock, man, I actually don't know. I mean, at the minute, what is it? 580 something? Let's have a look. 577 is that at the moment. So is that a fair price? I don't know. I mean, there are people that will tell you that, it shouldn't be valued any more than $300. I don't think that's necessarily correct. I don't think that's necessarily true. I mean, you can talk about what it should be valued at and what people are willing to pay for it. And I think that's the big thing sometimes. Like, people are willing to pay a little bit extra because of the belief of where the company is going, so on and so forth. That can lead to stocks being overvalued, though. So, who knows? I can't give you an answer to that, mate, because I don't know, if I'm completely honest. Why has AMC suddenly got hyped? Reddit was the answer to that. Yeah, you're not too far wrong with that as well. All right, so this is for, Mohammed on here. Yeah, I use CFDs on Trading 212, but it's a lot easier to see on eToro. It's not there on Trading 212 tips, though. Yeah, that's weird, because they should really make it a little bit easier for you to be able to execute those kind of trades. And that's where, the likes of eToro I find really, really useful to use, because it's very, very easy, like very, very easy to be able to use that kind of stuff on eToro. But yeah, I don't use the CFD side to Trading 212, so I can't really nudge you in the right direction there, mate. Sorry. This is a good question. This is an interesting one. Okay, I was always under the impression that it's very difficult to have a buy-to-let if you don't already have a typical repayment mortgage. No, that's not true, mate. I think, so one thing you've got to remember is, if you're applying for to buy a property, whether that be a rental property or a residential property, the process is pretty much exactly the same in terms of the scoring that the lender is going to do on you. All right, so you're going to borrow money to acquire an asset that will appreciate in value. You've got to go through the same affordability checks. You've got to go through the same credit rating checks. You've got to do exactly the same things, right? Those things don't differ. The criteria applied is slightly different, in the fact that with a buy-to-let, the income, the amount you can borrow is not based on how much you earn. Yes, you've got to be earning at least 25,000 to be able to apply for a buy-to-let. But with a residential property, for example, if you wanted to buy a property worth 200,000, then by the rule of 4, you need to be earning 50K a year. Okay, if you're just using straight maths. With a buy-to-let, that isn't the case. The buy-to-let and the amount that you can borrow is based on the rental income. That you need to have a £25,000 minimum salary, that you've got credit scoring on top. So the deposit is often the big thing. So with a house, you can have a 10% deposit. You get help from the government if you're a first-time buyer. With a buy-to-let, you need a bigger deposit. So there are some small nuances that make the process different, but fundamentally from a score and affordability point of view, it's exactly the same. It's no harder, really. The biggest hurdles will be the bigger deposit, mainly. That's what most people find as the biggest hurdle, the bigger deposit. But the scoring and the application process, it's not really any different to applying for a residential mortgage. All right, Lee, how you doing, mate? I'm well. People asking if if you should invest in AMC, if it's in the press. It's too late. Find your own growth stocks would be a great to produce more content together soon. Yes, mate. Listen, let's have a little chat. Because yeah, you're on the podcast and stuff like that. It might actually be worthwhile having you come on a live and stuff like that, because I did obviously a video this week about crypto scams, and that came at a timely at a good time, because not only have people tried to clone my account to scam you guys out of crypto, using crypto trading as the vehicle, but there are lots of them out there right now. And whilst stocks are AMC's really like blowing up and crypto is blowing up and all these coins are blowing up, you have to remember that there are really unscrupulous people out there that have no interest in helping you make money. Their only interest is getting your money off you. That's just the reality of things. And unfortunately, one thing I detest about YouTube is that there are so many people hyping up all of these absolute nonsense coins. Oh, you should buy this and blah, 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 and all this kind of stuff, completely ignoring that actually, whilst there is an opportunity, there is also danger that people don't know what they're doing. They really don't know what they're doing, and they can easily be taken advantage of, because when we start thinking purely about how much money we can make, the logical thinking part of our brain goes out the window, because we're not thinking about downside. We're not thinking about risk management. We've got our golden glasses on, thinking about how much money we can make. And that in itself is very, very dangerous. And again, I feel like I ruin people's dreams sometimes when they ask me, oh, what's the best one that's going to make me money? And, what can I invest in to give me a 40% return in like 3 months? I feel bad telling people like, mate, you need to check yourself and just, come back down to earth and look around and see what's going on. I feel bad for saying it, but the reality is that those opportunities are few and far between. And there's no really way of understanding or knowing exactly when those things come along, unfortunately. And I'm not the kind of person that will be like, yeah, give me your cash, mate. I can make that happen for you. I could scam so many people if I wanted to. I could recommend so many illegitimate or dodgy things if I wanted to. That I wouldn't be able to sleep at night. So that's just not me. And I'd rather be able to tell people like, guys, this is the reality, right? Yes, you can do okay here, but you need to manage the downside. I might sound like a broken record, but I think it needs to be said. And look, people may not like it. People may not like me for it, but that's just the way things are, unfortunately. Okay, so this is a good one. Gun Talk Music. I live in Europe. Where can I buy AMC options? The best place for you will probably be eToro, because they are available in Europe, and they probably have the furthest and widest reach when it comes to a provider usage. If you haven't got them, I'll post a link in the comments here for you. I don't know if I can actually pin that. 1 second. I've just put it in the link right there. Gun Talk Music. You can use that link, but eToro will be your best bet. You can definitely get options on eToro. I'm pretty sure that you can. So yeah, that will be the best option, especially because you're in Europe as well. Kevin, how you doing, mate? Let's have a look. Lee, set up a junior ISA. Let's have a look at this. Set up a junior SIP for my 6-year-old daughter. Get 25% HMRT top up. Well worth considering for those wanting to create generational wealth. Plus, it's 20-something fucked up proof. That's very, very true. I mean, junior junior pensions are really, really good, especially if you have kids. I mean, you can invest, I think it's 2,800. The government will give you a top up, which will take it up to 3,600 or something like that. And like literally have it invested in there for 20 odd years. You're doing your kid a massive, massive favor. Imagine if you had that available coming to maturity at age 20. Imagine that. Absolutely nuts. Really good start. Aha, this is a good one. What can I do as a 16-year-old financially beside watch from the sidelines? Mate, listen, I know it will be really frustrating because you can't do anything until you're 18. But in the meantime, if you can just kind of like get as much information and learn as much as you can. So if you're 16, mate. So for you, I'll be telling you, if you can, try and learn day trading. Because if you can master that in the time that you are now, when you hit 18, ready to go, like, yeah, you're going to have some hiccups. So you might make some losses here and there. But if you can master that really, really early, mate, it will be a tool that you could use for the rest of your life. And it could really, really set you up. So I would definitely suggest, try and seek out information, try and learn as much as you possibly can about the financial world, the markets, how that all works, because you've got 2 years right now where you can't do anything. But if you equip yourself, when you turn 18, mate, you're ready to go and you can just get in there straight away, knowing fully what you're doing. And I think, use this I know it's frustrating right now because you'll be looking at AMC and all this stuff going on and you're thinking, oh my God, I'm missing out. But like, listen, these opportunities will always be there. The stock market is always going to be there. There's always going to be another company that's going to have a bull run. We just don't know which ones they are. You'll have an opportunity to participate, but use this time to kind of like understand, learn, get a good foundation in some of the financial markets and some of the key core principles, and mate, you'll absolutely smash it. I wish I was thinking like you when I was 16, mate. I really, really do. Kevin, Palantir, I've not followed Palantir, if I'm completely honest, mate, so I can't give you any thoughts on Palantir. To be honest, I've slacked over the last 2-3 weeks because I've had so much going on. And I will talk about plans for the channel at some point. How long have we been on here? We've been on here for an hour 14 minutes. Well, we will get to like the plans for the channel at some point. But I've been doing so much work on a ton of stuff that I want to do for the channel that I've really just kind of ignored stocks altogether generally for the last maybe 2 or 3 weeks because I've just had a load of stuff on. Kevin saying that retail investors are annoying me. Anyone hold, that's a cryptocurrency, I think, and there I don't have that personally. Let's have a look. Let's have a look at this from Andreas. If the 70% is the short interest, that means that in the end, some people would lose or sell to other apes. So you must be willing to risk your money. Everyone won't win. What does apes think about that? I think that's very, very true. And I think, a lot of the time people go into these situations thinking that they have a 100% chance of winning. That isn't the case. It's almost 50-50. And the reality is, especially when you're looking at things like short squeezes like this with the AMC, you don't know when the short squeeze is over, not until at least a couple of days, if you're looking at the share returns and stuff. So you have to go into it knowing there's a 50-50 chance here that you're going to make some money and a 50% chance that you're going to lose some money. And as you get closer towards the end or what feels like the end, those odds probably increase even further in the opposite direction that isn't in your favor. And I think people need to be aware of that moving in, because you cannot have 100% winners all of the time. Somebody has to lose. What happens if it is you? Are you prepared for it? I think many people aren't, because the hype and FOMO is just it's such a powerful thing that people just want to be involved in it because they don't want to miss out. But I would rather miss out than lose money, but we just don't know what the probability of winning and losing is. And that often is where the frustration lies for many people. Right, just looking through the comments here. I'm just really conscious of time in a second, because I do want to talk about some of the plans. Oh my God, right. There are a lot of comments on here. Uh, this is a good one. I haven't. Well, I've got money sat in eToro at the moment. I can't say that I've withdrawn any money just yet. Um, so I don't know what the withdrawal process is. I know that you've got to pay a fee for it to be withdrawn. Um, they may do money laundering, so like ID checks. Some companies will. When you withdraw money, they will have a set procedure. So it depends what you mean by hassle. Me personally, I don't mind providing an ID if I have to ensure that I'm able to withdraw my money to my account. Because let's look at it this way, right? If that is one of the things that they do that people say is hassle, well, what happens if someone hacks your account and tries to withdraw your money? At least if they do ID checks, they know for a fact that they're sending money to you and not somebody else. So that's, for me, in my opinion, a security measure which is needed. And I wouldn't mind taking that step. So it really depends on what you mean by hassle withdrawing money. But then again, I haven't drawn any money at all from my eToro account just yet. There's just money sat there. So I don't know what the process is, but I've had no issues at all with eToro. I think the spreads can be a little bit expensive sometimes, depending on what you're buying. I think specifically on crypto, the spreads are pretty hefty. Just make sure you just make sure you're happy with what you're paying in terms of the spreads and all that kind of stuff. But I use them. I've used them today, and I use them for a part of my portfolio. So yeah. All right, this is going to segue into some of the stuff I want to talk about. Okay, so how's the channel going for you? And is it proving worthwhile monetize wise for you besides the gratitude of helping others? Right, really good question. How's the channel going? The channel is challenging, mate, because look, I'm acutely aware that I started this in the midst of a pandemic. So whilst views and traction were huge, especially towards the back end of last year, beginning of this year, like massive, in terms of like views. I was getting, at one point 160,000 views a month. Like that's just freaking crazy. Now it's a lot less because obviously people are getting back to work and the sun's out now. People are getting back to normal life. So that's just an adjustment that is to be expected. Monetary wise, it's okay. Let's put it this way. The AdSense, it doesn't really pull in enough to really cover the cost of maybe things that I did this weekend. So one of the things that I want to do on the channel is I want to be able to produce different kinds of content and not just have you guys listening to me talking about stocks and the markets and all that kind of stuff. I think that if you look to your left and to your right on any given day, there's always a story that you can relate to and lessons that you can take from people who are simply just around you. And one of the things that I do want to do is I want to bring in different perspectives, people's journeys into their lessons around what they do for a living and how money actually feeds into that. So over this past weekend, we shot 2 short films, basically, which will be coming out in about 2 weeks' time. And one of them, people have been asking me, dude, what's your background and all that kind of stuff. So there's one that goes over kind of like my journey, my background, all that kind of stuff, how I ended up in Canary Wharf, how I came to be doing this. That was going to be interesting. And then the other one is actually with someone that I know. I've known him for 17 years. He's a music producer. He's doing very, very well. He's had some massive songs out. But the industry that he works in is music. So we start talking about his story and we start talking about money in the music industry and what that actually does to you as a person when you're working in the industry with certain expectations of what the monetary earnings are and some of the key lessons and what money actually means. And I think that's really important because we're often inside a bubble where we don't see outside of our own perspectives and we think or place priorities on certain things that actually in the scheme of things don't really matter. So those are going to be called the conversations. The idea is that there will be a number of them come out. They will have people of note. I'm still going around how I'm actually going to get these people, to be honest. I've got a big list of people that I would love to have in this series who are well known, and it will be good to follow their story and actually learn about how they've come across financial education and what they're doing from a money point of view, investing point of view. But that's going to be developed. It's something that I hope one day will end up on Netflix and Amazon as a TV series itself. So this is kind of like developing it, but we'll bring it to the channel. So I'm really, really excited about that. There's some other stuff that will be coming to the channel as well. On June the 12th, which is on Saturday, not this coming Saturday, the Saturday after, we're going to be doing a 5-hour marathon live stream. So we're going to be talking about crypto. We're going to be talking about Forex and Forex trading. We're going to be talking about property. We're going to be talking about investing, and going to be talking about simple, like basic money management. It will be on the 12th. It will start at 11 and we're going to finish at around about maybe 4 o'clock in the afternoon. It will be an hour for each topic. I've got guests coming on. It's going to be a full day's worth of work. So I will need your support with that, really, to be honest. It's not going to get me anything in terms of, I'm not going to earn any money off it. Let's just put it that way. But I think it's worthwhile doing, because I think with the people that I will have come on in the different areas that they're going to be speaking about, at least people will get something from it. But yeah, we're going to be doing that on June the 12th. Another announcement I have to make will come next week. I'm actually really, really excited. I'm part of a startup, an investment startup now. And it's very, very different in terms of its structure. It's the only reason why I'm involved in it, really, to be honest. We had conversations early last year. They were on my podcast. So now I'm actually part of the non-executive directors team, trying to basically bring it to the mainstream now. And what they do is very, very unique. It's very, very different to a lot of the other providers out there, certainly from a fee point of view as well, and just the simple investment approach. So you'll get an announcement about that next Friday, but there's lots of stuff that's going on. But yeah, the channel at the minute is treating me really, really well. It's hard work. It's an inordinate amount of work. It really, really is. Financially, we'll get there at some point, I guess. But just things like, the short films over the weekend, that cost, in the 4 figures to produce. So I'm investing money, my own money, into building the channel out and providing content that I hope will resonate with people. And hopefully that means that I get the return back in the content and the engagement on the channel. I don't know whether it will work or not. It might not. It may be a complete failure, but it's something that I do feel strongly about, and an angle that I really have been thinking about introducing to the channel for a very long time. So we'll see. Those videos should be available in the next couple of weeks. They'll probably come out in series because they're quite long videos. So we're going to break them down into sections and introduce them there. But yeah, those are future plans for the channel. I'm quite excited. But yeah, as always, it's one of those situations where I have a plan. You don't know whether it's going to work until you do something. So we'll see how it pans out. But I'm excited about the 12th, because I think that will be a really good, worthwhile session. It'll be a full day's work. But if you are around on the 12th in the afternoon, then feel free to drop by. If not, it will be available to view afterwards as well, because we will archive it in the live playlist as well. Right. I don't know if there's any other questions on here. Let me just have a look at this very quickly. Yeah, so Training 202 are not opening new accounts for new customers anymore, so you can't have an account with them, unfortunately. Yeah, and I think someone's asking if there's any way around it with Trading 212. There is no way around it at all. So you're going to have to find an alternative provider. All right, let's answer this question from Georgina. What's your absolute number one piece of advice for a complete newbie who has no idea what they're doing? Really, really important that you don't pay attention to the news and just do stuff off the back of the news. The first thing you need to do, and this is really, really important, is you just have to understand, try and at least seek the knowledge to understand how investing works. That's the first thing. Then you need to decide how you want to invest. So do you want to go and buy individual companies like Tesla and Amazon and AMC, right? Or would you prefer to just go and buy like a basket of a collection of companies? The latter is easier than the first one. The first one requires work. So once you decide which route you want to go down, then it's all about seeking the information that is pertinent to each one that you have. But if you want, look, there are lots of videos on this channel that are free for you to watch. But if you want somewhere where it is put together in a really concise form that you can complete in like 94 minutes, my course will really help you with that. It's $59.99. So you can take that. And that will get you to where you need to be in order to know, right, okay, my next step is X. But yeah, just you need to make sure that you get a really good foundational piece of information first. That's the most important thing. Don't just follow what you hear on the news and just go copy. That can be quite dangerous if you're not prepared for all of the outcomes that are possible with that there. On a lifetime, do you make profit on a share? Will the profit be taxable and will you pay? No, because it's an ISA, it's completely tax-free, Duke. Remember? So ISA, £20,000 allowance, completely tax-free. So anything that is inside the ISA wrapper is completely tax-free. Beauty of having an ISA. Okay, I think there's a bit of conversation on there. Okay. Georgina is saying I had to use free trade. So with free trade, you can have the option of using both individual stocks and they have funds available in there as well. Free trade is a good place to start. Just make sure you familiarize yourself with all the options in there. Hopefully you started with an ISA as well. I know that they charge £3 for the ISA account, but trust me, you'll want to pay that £3 for the tax savings you can make as well. This question here. Hi, where do we find your course? Let me grab you a link. There is one on the description of all of my videos, but if I grab you the link here, so the website is going through a bit of a change at the moment. The course was actually sat inside a separate learning system, which has now been brought onto my website. So as part of it, when you take the course, you will also get access to a Discord server as well. So it will allow you to ask me questions, any questions that you have within the Discord server after you've taken the course. So you're going to get access to me essentially as well. What have I just done there? 1 second. The right one? Okay, cool. Yeah, so this is the right one. I'll post the course in the comments. If you have any questions and stuff like that, just feel free to reach out to me on either IG or just email me at pete@conversationofmoney.com. I'll just put my email address in there as well. But yeah, it's all self-taught. It's all video based. It's 4 chapters, 14 lessons, and you can finish it all within about 94, 96 minutes. It covers a ton of stuff. But if you go to the website page, there's a video on there that talks you through the curriculum. There's a written bit on the curriculum as well. You could find everything you need there. If you have any questions, feel free just to email me there. How much would the rough figures when AMC short squeeze? I don't know what that means. Right. Okay. So this is a good one from Kevin. So because I was in London shooting short films over the weekend, literally the podcast this week, I didn't have time to record one for Monday morning. We will be back to like weekly episodes from this week onwards, although I've got another video session to shoot on Sunday for another project, but I'll get the podcast recording done and ready for upload on Monday. So there will be a fresh episode on Monday. But yeah, I was just so busy over the weekend shooting because it's like location shooting and stuff. When I had a whole team of people doing it, it just took up a ton of time and I just didn't really realize it was going to take that much time. So I didn't get an episode out this week. Cool. All right, guys, I appreciate you all for being here. There are 101 of you here still here. We got 68 likes. You can do me one big favor. Let's get those up to 80 likes. We need another 12 on there. But yeah, look, there'll be another video out tomorrow. And maybe I won't be able to do a live over the weekend because I've got I'm supposed to be in London on Saturday, then I've got a shoot on Sunday. So we'll probably do another live session at some point next week. But yeah, if you have any questions, then obviously the comment sections are available. I'm stepping away from Instagram because everything that happened on Instagram, they were just terrible with just trying to protect people and just responding when someone clones my account. That I'm not really doing much on there. So the comment section is really the best place to hit me up. So yeah, I appreciate you guys. Thank you so much. Have a good evening, whatever it is that you decide to do.